Could a war ongoing in Iran for the next 6 months, for the next 12 months, could that create the next crypto millionaires? War's horrible. We get it. War's horrible. Okay. Let's get that out of the way first. Nobody wants people getting shot at. No one who's sensible wants cities being burned down or families wondering whether tomorrow is going to be worse than today. But our markets don't have feelings. Markets react to fear, uncertainty, shortages, money, politics, and what people think might happen next. Whenever the world changes very quickly, money tends to move quickly with it. Sometimes the money moves into the wrong direction. Sometimes it moves into strange places. Sometimes the money moves straight past the people who are still trying to work out what happened. Today, we want to have a look at Iran, oil, inflation, sanctions, crypto, and ask some uncomfortable questions. Where is the money moving? Understanding that might be considerably more useful than simply watching the headlines. Let's start with the oil. The Strait of Hormuz is one of those places people never think about it until suddenly everybody is thinking about it. A substantial amount of the world's oil passes through a relatively narrow stretch of water, and it's fine when everybody is behaving themselves. When missiles start flying, it's not quite so fine. Traders become nervous about supply, oil prices rise, transport becomes more expensive. Eventually, those costs have a nasty habit of finding their way into everything else. The supermarket milk doesn't magically get there. The farmer uses fuel, the truck uses fuel, the fridge uses energy, the packaging gets transported, you have to drive to the supermarket. So oil goes up and eventually somewhere, somebody has to pay, and it's generally you. Welcome back to inflation. Those who read my old book may remember my rather unpopular suggestion that rising fuel prices can actually tell us something useful about the economy. You don't have to enjoy paying more at the petrol station to understand what's happening with the flow of money. This is where it gets interesting. When people become worried about the purchasing power of their currency, they start looking for somewhere else to put it. For hundreds of years, the obvious answer was gold, silver. Now we have another candidate, Bitcoin. Bitcoin has been called digital gold. Many times it behaves like gold. Sometimes it behaves like a technology stock or a puppy after 3 espressos. Bad news arrives sometimes and Bitcoin falls. More bad news arrives and Bitcoin rises. Everyone declares that their particular theory has been proven until next Tuesday. This is precisely why volatility matters. Volatility simply means movement in the price. Can be up, can be down. For somebody buying an asset and planning to ignore it for 20 years, volatility can be a little bit annoying or just something in the background. For someone who's trading, the volatility is the market. It's the opportunity. If there's no movement, there's no trade for a day trader. Large movements create large opportunities and potentially a large opportunity to lose money as well as make money. So don't confuse the existence of opportunity with the guarantee of a profit. Those are two very different things. Then we get to the more interesting part. While everybody's watching the Bitcoin charts, governments are playing another game entirely. The governments can use sanctions. Modern sanctions are basically an attempt to tell a country, a company, or an individual, you can't sit with us. You can have money, but you just can't use our financial plumbing, right? Banks can be restricted, accounts can be frozen, payments can be blocked. Access to international financial networks suddenly become much more difficult. If you're in Russia, you can't use your Visa card. If you're in North Korea, you can't use your Visa card. Can't do an international transfer. So what do we do if we're sanctioned? Human beings do what we do when the road is blocked, when the mountain is tall. We look for another road. Crypto provides a possible road because it allows value to be transferred from peer to peer or from government to government without requiring every transaction to pass through the traditional banking system. It's not a new idea. This idea was remarkably simple: electronic transaction without a middleman. That's the feature. It's also the complication. So the same network that can help an ordinary person move their own money can be used by people that the governments don't want using their money. So such as the Iranians, such as the Koreans, such as the Russians. Governments understand that. So the exchanges and the crypto businesses connected with sanctioned jurisdictions have been getting more attention from the regulators. And we're not talking about you just sending $50 to your cousin. We're talking about hundreds of millions of dollars, particularly with the payments that are being made through the Strait of Hormuz to let the oil tankers through. So we don't want to follow the sanctioned money. There's legal problems with that. You're also competing with governments, intelligence agencies, professional traders, blockchain analysis companies, and people who have got a lot more money and a lot more information than you have. So you can't compete with that, but understand what it tells us. So crypto is not just a bunch of nerds swapping imaginary internet coins and meme coins and hoping somebody else pays more for it tomorrow, so the number goes up. Part of the crypto economy is used by world governments now. It's used by countries. It's used as genuine financial infrastructure by major financial institutions. So that's very important. When you're looking at an economic event, you want to look at who gets paid. When the oil goes up in price, who gets paid? When the money moves between countries and different governments, who gets paid? When the billions and billions of dollars are moving between exchanges and crypto guardrails, who gets paid? So we're looking at the roads, we're looking at the bridges, we're looking at the marketplace that's underneath that. So this is an old investment lesson, wearing very new clothes, because in the gold rush in the 1800s, everybody was talking about gold, 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 but you would have been better off owning the shop that sells the picks and shovels, because you always made money. Whether people lost a fortune, whether people made a fortune, picks and shovels or where it was. Crypto is similar to the gold rush. We've seen this before also with the internet rush in the late 90s. The people who made money were the ones who were supplying the fiber optic cables and the copper lines. So with crypto, the exchanges earn fees, the networks earn fees, the infrastructure providers get paid, liquidity providers earn spreads, traders try and make a profit from the difference in between the markets. And it's not simply about which coin goes up, it's which part of the system becomes more valuable when we get more players in. And again, we're talking major financial institutions, countries, and governments here. So if you want to look at where the money is moving, absolutely subscribe to the channel, go to the page, get my free book, get the free newsletter. You can probably read faster than I can talk, and you can understand that stuff. We've just done the 20-year reprint of the book. There, 20th anniversary reprint, and have not changed a word. So still current 20 years later. Anyway, back to Iran. The next crypto millionaires don't come from Twitter. So we're not looking at just war leads to inflation, therefore Bitcoin goes up. Markets aren't generally that predictable, but we can predict long-term, not necessarily the day-to-day static. So a longer conflict in Iran can push inflation higher. Higher inflation can influence interest rate expectations. Interest rates affect currencies. Currencies affect global liquidity. Global liquidity affects risk assets, of which cryptocurrencies are definitely still there. Bitcoin behaves like a risk asset, even though some people would like to treat it as a guaranteed wartime insurance because it's gold, but it's also a tech stock. I'm not saying the Iran war is going to go on for the next 5 years, so you should definitely buy Bitcoin. This is not analysis. That's just prediction. No one can do it. The more interesting thesis is that major geopolitical events, such as what we're looking at the moment, expose which parts of crypto people actually need when the traditional system locks them out or becomes difficult to use. Look for utility under pressure. Look for what continues working when banking access becomes difficult. Who provides the liquidity? What moves the value efficiently? Which networks have users? Which businesses make money from the activity rather than the hype in the headlines? More importantly, which of them can operate legally in the jurisdictions that are relevant to you? We've been using the coin framework for the last 10 or 11 years. So the C-suite, who's running it, the offer, the operation, what does it do? Investors, who's putting money into this thing, and the network, who's talking about it, who's using it. War doesn't magically turn a rubbish coin into a good investment. A useless project with a clever ticker symbol is still a useless project, just with more volatility. So we don't buy the story, we follow the economics, we look at it sensibly, and Don't panic. Oil's going up, Bitcoin's digital gold, governments are using crypto, privacy coins are going to make a big, big comeback. But what are you actually buying? Does it have users? Does it generate economic activity? Does it solve a problem? Can any competitors easily copy it? Who controls it? What could kill it, whether it's an act of legislation or whether it's human nature doing things differently? If you can look at those, answer those questions, can you understand what the token does, what the coin does, what the system does? And can you explain it to a 10-year-old? Can you explain it to one of your friends or to your mum without using the words decentralized synergistic interoperability layer, right? If you can't, if it's too complex, probably don't invest into that. Again, picks and shovels. People love the story about buying a rogue meme coin for 3 cents and selling it for $30,000. But no one tells you the story about the thousands and thousands of coins that they bought for $10 and they went to zero. Wealth is not generally created in an instant. It's not created by excitement. It's created by understanding something before most people understand it. It's about being ready to act when the numbers make sense and having enough capital to survive the next dip. The Iran conflict, I think, will go on for probably another year or two. That's my personal opinion. It might be over by Christmas, who knows? But both parties, I think, are very, very stubborn. And again, no one likes war, but it could be good for business. It could increase interest in cryptocurrency as an alternative monetary system, could increase demand for crypto payment infrastructure, could increase regulatory scrutiny. It could increase interest in privacy technology. So I want to be looking at some of those things, looking at what the traders are going to be playing with. Some people will make a fortune on those changes. Other people will make a other people will lose fortunes because they're chasing the wrong thing. They're looking at the headline. So you got to keep your head when everybody around you is losing theirs. War changes the flow of money. Oil moves, currencies move, governments react, investors react to the governments reacting, reserve banks putting the interest rates up. In the middle of all that confusion, capital finds a new home. It may flow out of bonds, may flow back to precious metals, may go back to cryptocurrency. That's what I'm watching. Bitcoin has been up 8-10% in the last 24 hours. Doesn't matter. It's still static, right? We want to look long term. So ignore all the static that's going on. This is going on. This is going on. Someone's selling. Michael Saylor's selling. War's going on. War's stopping. There's a ceasefire. There's something else. Someone on Twitter has posted a rainbow chart. Someone's launched a new meme coin. We want to look at where the money is being forced to move, what infrastructure is below that. If the traditional financial system becomes too onerous, then the alternative routes become more interesting. If millions and billions of dollars start using alternative routes instead of the SWIFT banking system, somebody is providing the infrastructure. Somebody's collecting the fees on that toll road. Somebody owns the network. Somebody may have spotted the trend early. And we want to be looking where those people are, how they're making money out of it. What's the financial infrastructure that becomes more useful when the traditional banking system becomes less useful? Don't chase the headlines. Invest wisely. Invest for the long term. Diversify your portfolio and have some balance in your life, because at the end of the day, wealth is more than just money. Take care. See you soon.